All right, happy Saturday, everybody. It is January 20th, 2024, here at precisealgorithmtrading.com. And wanted to start here on our website just to show everybody that the daily review is here on this tab. If you click here, you get in. Um, this is uh, our last video. This thing will be updated when this video is over. But in case you come here by way of YouTube and you wanted to go to our website, it's precisealgorithmtrading.com, and then you just come to this daily review tab. There's other tabs here. There's more information. There's information on the home page and the algorithm trading systems products or trading systems page, the terms page, and but really where I do my homework in the daily review, and then I just share that in case it can help people. So that is the point of this. Let's flip back to stockcharts.com. We'll get to this in a minute. And let's go to our automated trading systems. So I wanted to show, this is the Dow futures, and so on Friday or Thursday, coming into Friday, I was wrong. I was expecting the markets to roll over, but well, the markets can do whatever they want, and so you need to be prepared for really anything. And anyways, the so things are rallying and volatility is up, so that combination makes for some good trading days, and we're having that especially in our futures and our automated trading here. This is the Dow futures. That is the YM contract and the first quarter of 24. And let's take a look at the individual trades. So the 19th down here, we had two winners and one loser, and you can see the winners really outpaced the losers for that day. That's great, and especially if you add in Thursday as well. It's been a really nice pop here lately. This is our Russell. Sorry, this is the YM contract for this from 1018 of 22 to 119 of 24. So more than a year's worth of data, and this is what we're shooting for, which is just a nice upward sloping equity curve. So it'd be nice to just have this thing go straight up, but that's not realistic in the way that markets move, and so we have to take these dips, and the point is to try to eliminate the dips as much as possible. This is the Russell contract, and this is just the continuous contract. We don't have the specific quarterly contract running right now because I've still been working on these dips and haven't come up with a great solution yet to make them really better, but this is still a pretty decent upwardly sloping equity curve. So, and we've got new green dots, which means new high equity. So this is the 19th, and you can see, two winners and one loser again, but and the winners have outpaced the losers there too. And you can actually look at this whole stream here. There's many more winners than losers, and that's another obvious point. So um, here's our Nasdaq, and that's the first quarter of 24. So, and you do have to change these contracts quarterly. I get a notification and change them. So, um, but they are good for a quarter, which is nice. You don't have to change them very often. So we've been steadily moving higher here, and these dips are somewhat brutal. You can see we went from 90,000 down to just under 60,000. So that's a $30,000 fall. And I want to just kind of explain, this is three contracts. So you could have, if you only traded one contract, you'd have a $10,000 fall or thereabouts. So it's all like risk tolerance and account size. That's really what it boils down to. So our individual trades for the 19th here, again, two winners and one loser, and you can see that the winners outpaced the losers, and you can really see on this whole chart that the winners, this whole stream. This is page 5 of 5. This stuff goes on. I mean, there's So this much, there's 5 pages of that type of data that make this up. And then if you open it up to more than a year here, we've got from 9 of 22 to Friday of 24. So you can see these dips, they look a lot better when you really string it out. And there's still work maybe I could do to eliminate or to reduce these dips. But the one thing is I want to keep it consistent as well. So you just have to basically take the dips and let the thing work the way it does and make sure it just doesn't jump off the track, because it is a computer and it's not infallible. Alright, let's flip to the charts themselves for what happened on Friday with the the indexes, and we'll go into some other stuff here. So you can see on the this is, I'm showing time frame 10 years worth of day bars, so 10-year daily bars, and this is a new high formed in the S&P 500 futures. So you know, when new highs get formed, basically um, the trend is your friend till it ends, and we've got basically a lot of bullishness in the market, and trends don't give up without a fight. So that's what's going on here, in my opinion. The That doesn't invalidate that upper line, and it doesn't invalidate the lower line. What it does, if I go in here and grab a drawing tool, I can actually tie these two pivots together and extend that to the right. And now we've got not as drastic of a converging channel. There's another word for that, wedge. So you can see we're this channel is not perpendicular. I'm sorry, parallel. Yeah, the channel's not parallel exactly, and you can see this one's rising from the bottom. At some point, you know, all rising channels eventually fail, and by the way, all descending channels also fail to back to the upside. So, but you can sure use these things as tools, and we will see some resistance come in when we hit the top of this channel. And that's not to say it can't blow out, because it can. But as of right now, there's just a lot more bullishness that's just pushing things higher in the markets, and that's great. It helps our bullish positions, and we still hedge, and our hedges got taken out on Friday. So what? This is the Russell coming in here, and you can see we got a nice bounce off the bottom Keltner channel. So, and we're really close to this 50% line of that whole move. So we'll continue to monitor that. We need to start like really breaking new highs and new lows if we think this thing's going to go back up, and we'll see that actually play out on the hourly chart first. It's just there's no way to start really climbing back out of this on the daily without it happening on the hourly. If anybody's got an opinion on that's different than that, I'd be really interested in hearing it, because I don't think it's possible. So we have to start breaking pivots on the hourly chart to the upside and reversing this whole thing, and then eventually break this higher pivot. The Dow, it looks like it just doesn't want to go down, which is fascinating, and you know, eventually it will. Um, and when it does, it probably will be pretty rough. So, because yeah, all good things must come to an end, and basically the way the markets work is you get going in one direction, it tends to go farther than anybody expects, and then it just reverses and it tries to do it out of the blue, and then it takes everybody back behind the woodshed, and we just try to get on the side of the trend when it's doing that. Now, something to be said is this 30 period moving average is upwardly sloping and hasn't changed, so the trend is up. So that is kind of important, and we did get that reversal back here. So until all that reverses and rolls over and turns red, this thing will be up, or at least sideways. And then the NASDAQ just blew right through our stop. And if we go to the Qs, I don't think it'll make any difference. That's where our stop got taken out, and it was there. So we got taken out right at the open, and then it continued to go higher. If we would have been still in and not had a stop in place for that, we would have gotten taken further underwater, and our position just would have lost more money. There's no reason to do that. Just put your stop in place and be done with it. That's something I had to learn in time and the hard way. And you can see we are breaking those pivots right and left over here, and we certainly have new highs and higher lows going on the hourly chart. For that matter, it's very clear on the daily chart as well. So that was the NASDAQ. The transports, the 30 period moving average is red. We're coming up and retouching it. So this thing is still vulnerable, and we're also underneath the ATR stop. So um, a downtrend from here would not be surprising. And again, we're red here, and we've just come back up in, and that's the kind of move that hurts if people are short this position. You could, if you're going to short from here, you could short all the way from all there all the way up to almost the top and set a stop right there. And if it rolls over, then you're golden. If it doesn't, then you just set yourself a stop and you take low risk, and you try to get yourself at least a 1-to-1 risk reward ratio to go down. And that's it. So oil looks like it fell on Friday. It's going to take a second to flip over to the back to the futures contract. All right, come on. There we go. Performance problem. Yes, there is. All right, oil is. You can see the moving average is green, so that's a positive signal for a reversal. I talked about on Thursday night that we have to start breaking these pivots to the upside. We haven't yet, and so we'll just keep monitoring this one. And again, the real contract is the one where I've got the oil going on like this. It's the USO. It's an easier. It's more like a stock position. It's an exchange traded fund for what it's worth, and same thing. It pretty much works the same way, and we're again green on the 30 period moving average. So most of the signs here are up. And gold, I think, is our last one. We could look at silver. Let's look at Bitcoin while we're here. So gold has sure looked like it's starting to roll over, and you could actually short it from here. Be careful when you do. Put your stop here or here, and set yourself up for a move that's at least 1-to-1 risk reward ratio. Now we also have momentum that's down right now, so this can come up quite a bit before it rolls over. And let's look at BITO. See, this is Bitcoin strategy. There was big news in the last couple weeks about Bitcoin coming out with their first exchange traded funds, and we'll look at that because I did stick it in the watch list over here. But it's similar. This is Bitcoin strategy, so you'd have to really look into and care what's the difference. But let's look at this chart with its pattern and then flip it over to ARKB. Yeah, you can't really see it yet because it's such a new instrument, but obviously this one's down. If you go back to BITO, BITO, the one I just had in there, you can see that they're actually, this has been down as well. So they are trending pretty much the same way, tracking the same way. So, you know, pick your poison there. This one's been around longer. It's got a lot more data and history. That helps. And then Coin is Coinbase, and it's, you know, obviously, well, it's maybe it's not obvious. It's a stock for a company that manages things like crypto and that type of thing. And so um, you have to, well, you don't have to. There's probably other ways to do it, but if you get a Coinbase account, you can buy and sell cryptos, and they've got multiple kinds, and it tends to track similar to uh, Bitcoin as well, and I find that interesting, but I guess it makes sense. So it's like Bitcoin's its underlying product, but it should be independent of Bitcoin, in my opinion, to some extent. So, all right, anyway, that's enough of that. Let's flip back to stockcharts.com. Type in our bullish percent indexes and wrap this up for the weekend. So, the industrials didn't move. The NYA is in a column of O's but went up a little bit. The transports didn't move at all. The NASDAQ flipped over to a new column of O's while the market was just crushing it higher, so that's wild. The SPX went up 1.45% in a column of O's, and the OEX, the S&P 100, went up 2.82% in a column of O's, and the NDX flipped back to a new column of X's. So there's your strength. 6.94%. Your NASDAQ 100 went up. Those are the, I think I can say this, top 100 stocks in the Nasdaq. You know, you can go Google and say what stocks are in the Nasdaq, and you can see the 100 or the Nasdaq 100, and you can see which stocks make up that exactly. But my guess would be Apple, Facebook, or sorry, Meta, Amazon, Google, Netflix, Microsoft, and things like that. So, in fact, let's go look at one last thing and type in Microsoft here. MSFT. Microsoft and Apple, I believe, are in a contest to see which one's going to be the strongest stock, and with the largest uh, market cap, or um, basically its value in terms of the market. And yeah, Microsoft is just tearing it up right now to the upside. And if you look at Apple, it did a nice pullback here, and certainly looks like it's, you know, back on a pace to rally again. So after this back and forth to the downside, so we had a intermediate term downtrend going on, and now we've got what appears to be an intermediate term uptrend going back on. So, and that's what I have for the weekend for you guys. So hopefully it helps, and hopefully you have a nice rest of your weekend. Take care, and we will talk to you next week.